If you have not noticed, the dollar has been crushed this week across the board, especially versus the NOK and several other so-called commodity currencies. As I said in a previous video, the dollar needs to correct much further in order for there to be balanced conditions that can promote global growth. So any correction in the dollar is a welcome sign, especially during the current COVID-19 crisis. The problem with an inflated dollar is that it makes it difficult for dollar-denominated debt to be serviced and rolled over by countries and companies outside the US. In times of market stress, dollar funding liquidity is very important. Any shortage of dollars increases its value and the interest rate that has to be paid. As the chart depicts, as of Thursday, April 9th, about $350 billion in dollar swap liquidity has been provided by the Fed to central banks around the world. This has removed the search for dollars, and as such, it has taken a lot of pressure off local currencies, especially in the EM space. Please note that this is bearish for the dollar. As long as swap lines continue to increase, which I think they will, the dollar should correct even further. The bottom line is that while the Fed is the central bank of the US, by virtue of the fact that the dollar is the world's trade and funding currency, the Fed is also the central bank of the world because it is the lender of last resort for dollar liquidity. This because while central banks can create local currency for emergency funding needs, only the Fed can create dollars.